Good morning, traders. This is day 4 of my small cap market open test trading with real money. And today was not a worst case scenario, but definitely wasn't a best case scenario. I'll show you exactly what I mean in just a moment. I took 3 trades right at the market open, all in the same ticker symbol. And I'm going to show you my spreadsheet at the end of this video as well, since we didn't get to go over it this weekend. So first, let me show you my screener and how I pick these stocks in the morning. So I go over to my screeners. I have a small cap screener set up. Click on those 3 dots, click modify. Otherwise, your filters will not be applied. And these are the criteria, and I'll even show you my filters that I'm using. And I find the least amount of filters the most effective in finding the stocks that meet this criteria. So I organize the list by volume, and then I'm just looking for the stocks that are going up in price, so just the green ones. And then I prefer, if it's between, say, 2 stocks that are going up, like, say, ATER and SURF, I prefer the one that has higher relative volume. It's not to say that that's a guarantee that the trade is going to work and that the other one's going to fail or whatever, but it's just a preference, because generally that is a good sign. So you see that 8 million shares being traded on SURF looks like a lot less than ATER, but when you consider its average volume is about 15 million, this is only maybe about 30% or 25% more volume than normal. And on SURF, the normal volume is, or the average volume is about 800,000 shares. So we're about 10 times that volume. So that's what I mean by, that's what I would prefer to trade. And then you see everything else is red. I mean, right now it's September 20th, and it's looking like we're in a huge market sell-off. So I wasn't that hopeful for trade working out this morning, but I'm trying to design this plan so that it can be traded in any market condition. So it has very strict criteria that guarantees strength, or tries to guarantee strength in the stock before you actually take a trade. So let's take a look at the video and you'll see exactly what I'm talking about. So this is just my chart view. And I was just kind of at the open, there was nothing. So I was just looking at some micro caps just to kind of see what they were doing. I was not going to take any trades on those because that's not part of this plan. This is strictly small cap trading. So finally at around 9:34, a small cap stock popped up in the green, and that was SURF. So here you can see this one had a little bit of an issue because on the daily chart, it's trading below the 200 MA, which means that I can't trade it. So what I did was I marked out where the 200 MA was, and then if the price broke out over that level, excuse me, that's my phone. If the price broke out over that level, then I could take a trade on it. And, I was hoping that it broke out considerably over that level, and it had to break out in a very specific way, and I'll show you that as well. Otherwise, I was just not going to take a trade on it. So let's take a look here. So these 2 yellow lines, they're very important. The first one represents the previous high. Actually, let's see, not that one. That's the second line. Let me see if I can get to a nice spot where it shows both. Okay, so here's the first line. This represents the previous high. So that could be from the aftermarket, the pre-market, or the previous day. I want to see the price break out over that level. That's my first indication that there is strength in the stock, but I do not take a trade just after that break. So that's the first break. Then it establishes a new high of day after that break, and that's what this yellow line is. Then I need to see a pullback from that level, and I need to see that high of day broken. Then when there's a pullback from that new high, that's when I can take a trade. So that is the whole kind of setup in this plan. That's the only entry that I could possibly take. And then if that entry fails, I could take up to 2 more trades. And then if all 3 fail, I stop trading for the day. So let's see what happened today. So you could see that this is my high of day line, that second yellow line, and it was broken. So this is when ATER popped up, but this one looked even worse on the daily chart. So let me see here. Let's see where I was. Okay, here's ATER on the daily chart. It's extremely far away from the 200 MA on the daily. You can see that's around $20, and it's trading around $12. So it's not very likely, and I don't think it has broken out through that level yet. So I was not even really considering that, so I didn't put any lines on that chart. I just left it there because it doesn't really matter whether it's there or not. I wasn't looking for a trade on it. And then here comes SURF, and you can see that this was what I was requiring during this session, was that it had to continue on through that level that was set by the 200 MA in the daily chart, all in one move. So you could see that it's going up, ascending without any pullbacks, all in one move. And this is something that's kind of a little bit, I guess, specific. It's not really in the plan. It's not like I was breaking the plan trading this, but this is kind of something that I had to kind of think about on the fly. And I did track this in the spreadsheet. So if this happens again, which this kind of thing I don't think is going to be happening very often, but if this happens repeatedly, we could start to see, well, how often do these trades work out? And maybe if a scenario like this comes along again, if they're not working out often enough, we can just remove them from the plan. Just put something in the plan to keep me from trading them. So here you could see it broke out through that 200 MA level, and by quite a lot, over 1% on this one single candle. I mean, just the distance from the 200 MA line and this price is like 1.25%. So that's a pretty strong break. So now I'm just waiting for the first pullback. And then as soon as a 1 minute candle makes a new high after that first pullback, that's when I enter. So here, again, this is kind of like an early trigger, and these are not ideal, at least not in my mind, although these have worked out really well in this small cap test trading so far. But it always feels like, okay, you're getting in when it's a little bit overextended. But again, that's like a subjective thing, and I don't want any subjectivity in my trading. If this type of an entry ends up being unprofitable in the long run, we can always adjust the plan to keep ourselves from trading it. But what I do not want to do is to be thinking too subjectively once I'm in a trading session. I want to be very mechanical and robotic about my entries, and that's what happened here. Is you could see that this candle in just a moment is going to break out over that 825. So I define this as a pullback, even though it's only one candle. That red candle, the price obviously closed lower on that candle, so that is a pullback. In an ideal world, I would prefer to see another red candle or two and then get in, but that just didn't happen here. And it's interesting to note as well, now that I'm looking at this video, that this entry would have worked out really well and gave a nice 2R trade. And this was the old entry that I used to take on the mid-cap test, and it did not work out often enough, yet it's working out with the small caps pretty well. So that's something to keep in mind as well. It's really too early in the test to make a decision about whether or not that should be an entry. So here is the first entry. As soon as that price broke out over that 826, I triggered my hotkeys to get in. I got filled a little bit lower at 824. And then I'm using my 2R calculator, which if you're interested, you can download from patreon.com/tradingarmor. Definitely a handy tool, especially with these volatile stocks. You want to be able to figure out your profit target really quickly because these things can move either direction in a very short amount of time. The most important thing is once you place your trade is to grab that stop loss and move it up into position. I have my hotkeys set so that the stop loss pops up at minus 10% and the profit target pops up at 20% above the position, and then I can move them in place. The reason why I have them so far away is that way there's no chance that any volatility could shake me out before I move them in the proper place. So here you're going to see the first trade fail. It's going to stop me out. Just fast forwarding. So we got stopped out there. Now let's look. So the next entry is going to be as soon as a 1 minute candle makes a new high. And it happens right here. I'll show you that in real time. So it's based on as soon as, it's the high of this candle here is 796. So you see as soon as 797 was hit, we'll watch it here in real time. Just watch this price bubble. 795. There's 797. And you can say trigger my hotkeys. I get filled immediately. Again, move that stop loss up in place. That's critical. Now I chose to move it to below this candle, even though my entry was on this candle, because this one did not make a new high. So it kind of looks like a little bit of a consolidation area here, even though it's only two candles. So this is like an inside candle. So anyway, here we are using the 2R calculator again, getting the profit target and then moving that in place. And I think before I even drop this profit target in place, I get stopped out on this trade. So that's 2 trades down. So we're minus 2R so far. We can take one more trade. If we win the third trade, we are up 2R on that trade. So that means a break even in total. So that's why I take that third trade. My statistics after taking 100 trades with the mid-cap test shows that that third trade was profitable. So it makes sense to take that third trade instead of walking away minus 2R. The chances are that my third trade will win, and they're better. The chances are better that the third trade will win than not win, and that means that my chances of a break-even day are good. So anyway, let's fast forward here. Look for the next trade. So here we go. As soon as a 1 minute candle makes a new high, that's when I get in. So I think 784 was the high of this candle. I got filled at 786. Again, moving that stop loss up in place is critical. And now, the previous candle here was the lowest candle, so that one is the one that I placed the stop loss on. I try to place it on the previous candle to entry, but if, say, my entry candle is lower, then I go below that candle. If it's a consolidation, like this one kind of looked like it was going to be a consolidation area, then I place it below that consolidation area. So now I'm in the trade again using the 2R calculator. Get my stop loss in place, that's first thing, and then profit target, and then this trade works out. So not only does this trade end up working out and going to 2R, it is another trade that went to 3R, and I'm tracking all of that data on the spreadsheet. So in the long run, we'll know whether or not we should be holding to 3R on these trades. And so far we should be, but the whole idea behind this test and this plan was to test 2R all or nothing trading. So we're going to do that all the way to the end. But as I said, we're going to track those 3R results, and we'll see at the end what we should do moving forward. Right now, we're only trading with one single share. That way, whether or not this plan works out or not, if it proves to be profitable or not, we're not risking a lot of money. We're not going to lose a lot of money. We only spent $4.99 taking 101 trades on the mid-cap test. So if this thing doesn't work, it's probably going to be something similar to that. But so far, it's making us money, even though that's not really the point here. So let's take a look at the spreadsheet now that trade is over. And let's see. And let me show you, I'll show you on the chart real quick what SURF did afterwards. It really did move quite strongly. And this just kind of proves the point of why these indicators that I'm using, these breakouts of different price levels, do show strength in the stock, because these things keep running afterwards. Let's see here. But again, I can't say that definitively yet because we haven't taken 100 trades. Let me open up SURF and look at the 1 minute chart. Now it's selling off big time, but let's see here. Where did we sell it at? I think 810. Yeah, so 810. And then you can see it went to all the way to 838. I think we only needed, I have it on the spreadsheet here, how far I think it had to go. Let's see. So what was the risk? Was 11 cents. So 22, and then another 11, 33 cents above the entry. So what is that? Let's see. Don't want to make a mistake here. 819 is all it needed to go. So it went all the way to 838. So it probably would have given a 4-hour trade, but yeah, we're not tracking that one quite yet. So anyway, really interesting move, very strong move, and easy trade on that entry. Obviously, the other entries were false breaks, but I've taken those entries already on previous trades, and you could see that everything is working out really well so far with this strategy. This is the first day that we've had to take all 3 trades, and luckily we won that third trade, so that made us break even for the day. I did write down a special note that this stock broke above the 200 MA on the daily during our setup, so obviously that means that it was below the 200 MA before that. So that's an interesting data point to collect, because if we find out, okay, every time we trade in a scenario like this, we lose the first 2 trades, then there's really no reason to trade it long term. So tracking all that stuff. So far today we had the break-even win rate. The last 2 days we won the first trade, and then the first day we won 1 out of 2 trades. So here's our results so far. It's only 7 tests, 7 trades, so it doesn't really mean anything yet. But you can see that we haven't lost any money trading this. In fact, we have gained $1.36, and that's not the point. We're just keeping track of that to see how much this thing costs us in the long run. And our R value, which is how many times up our risk that we are at this point, is 4. We're up 4 times our risk. And that's the way we can define, like how much money can we make off of this thing based on our risk in the future. If you're risking $10, obviously you'd be up $40 at this point. If you're risking $100, you could be up $400 at this point. And then if we would have held these trades to 3R, we would be up 7R at this point. So that's even better. And you can see that every single one of these trades that has gone green for us, in other words, that went to 2R, has also gone to 3R. And that's pretty surprising to me because in the mid-cap test, that pretty much never happened. There is one exception here, this CDEV trade, which we had to close at the end of the day. We had to close it for a 1R profit. So it wasn't a losing trade, so it gets counted as a winner. But it just is one exception where it only went to 1R before we had to close it. And then you can see that the SURF, the one we took today, went to 2R, also went to 3R without any issue whatsoever. So very interesting data that we're getting so far. And also I'm tracking the size of the market cap of each stock that we trade, so we can maybe find out if there is a special range within that small cap market range that is even better to trade than the textbook range. So let me know if you have any questions about this trade or these trades, this plan, the spreadsheet. All this stuff is available on my patreon.com/tradingarmor page if you're interested. And anyway, always take every single trade with a plan and stick to your plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.